Friday, September 7th, 2018, Monaco 64, home of alternative economics and contrarian views. This morning I want to talk about the dollar index specifically, and why people need to keep their eyes on the ball. And by that I mean you need to keep a hold of your precious metals, gold and silver. Physically is the best way, of course. You want to take the fiat, you want to get out of the fiat money system because it's unsustainable, that system. It's based on unsurmountable amounts of debt, and we know that it won't last forever. And I think we're getting closer and closer to some kind of event. But people shouldn't be fooled, be they either in the United States or anywhere else, that holding dollars will protect them. And I will show you by the charts that the dollar index hasn't really done anything. If anything, it's dropped since the Federal Reserve started reversing its policy, accommodative policy, in December of 2015. And I think we're getting closer and closer to the Fed ending this policy of tightening. And I think they did it mainly because they know something's coming and they're gonna have to start cutting again. And when that happens, look out below for the dollar. I think they've been raising rates actually to save the dollar, not because the U.S. economy is doing well or anything like that. So before I go deeper into the dollar and the dollar index, let's quickly look at what the markets are doing this morning. It's just gone past 8:30 a.m. London time. Spot gold 1199.20. So still hovering around this 1200 level. The low has been 1198 overnight. The high 1203.50. So not much change in gold. Silver underperforming yesterday when gold traded up quite well towards 1207. Silver was up, but it was underperforming gold, which isn't a great sign for now. Right now, silver is down 4 cents at 14.11. Stock markets. The Dow doesn't seem to want to get back up above 26,000. It's at 25,977, down 23 this morning. The future S&P 2876, down 2.5. The NASDAQ 100 future is down 7 points only. One thing I would say about the NASDAQ, I did a video a few days ago or a week ago, and I showed a long-term chart of the NASDAQ and how it looks massively overbought. I'm not saying I called anything, I'm just saying that we've had quite a bit of a drop in the last 3 days in the NASDAQ. I think we got up to, the NASDAQ 100 got up to almost 7,700 or 7,680. And now we're at 74.40. So keep an eye on the NASDAQ. All right. So what about the currencies? Well, this morning the pound is up 0.1%, 124.41. So not much change there. Euro as well, fairly steady above 116, 116.40, up 0.15. Dollar nominally lower against the yen, only down 5 pips at 110.69. Dollar up slightly against the yuan at 684, up 33 pips, which is nothing really. So currency is very stable. Crude oil, yeah, we've made quite a big move in the last few days from above 70, almost at 71 WTI. Now it's at 67.76. Emerging market currencies, fairly stable. Turkish lira is still holding around that 650, 660 level, the dollar. Brazilian real today is a holiday in Brazil, so won't be trading, but it's rallied back a little bit. We got up, the dollar got up to almost 420 against the real recently, and yesterday closed at 406. So things seem to be calming down for now, emerging markets. What about the Italian government bond yield? Well, that's Actually, that spiked back up yesterday because I saw it earlier yesterday. It got down below 3%. And today it's at 3% and it's down 6 basis points. So I didn't follow it yesterday afternoon. So it looks like it spiked back up. So it's still not out of the woods yet, Italy. So dollar index, there's a lot of talk. You know, I don't watch CNBC or Bloomberg anymore, but I read a lot. I watch a lot of videos, and there's a lot of talk about King Dollar, how the dollar is doing, you know, really well. And it's true to some extent, but we need to look. That's why I like to look at charts and look at the bigger picture, long-term picture, to give you more of an idea so that you can keep things in perspective. So first of all, I want to look, you know, we talk about the dollar index, but what is the dollar index? So Wikipedia, the US dollar index is an index of the value of the United States dollar relative to a basket of foreign currencies. And I would even say that it's not the United States dollar, technically. It's the Federal Reserve note. But anyway, often referred to as a basket of US trade partners' currencies. The index goes up when the US dollar gains strength when compared to other currencies. So what's the weighting? It is a weighted geometric mean of the dollar's value relative to the following select currencies. So euro, 57.6% is the weighting. So why is the euro got such a heavy weighting? Well, because prior to 1998, the euro didn't exist. And you had the Deutsche Mark, you had the French franc, the Dutch guilder, the Italian lira, all these other currencies. And that made up, that went on to make up the euro, and said that's why the euro is so heavily weighted. Then you've got the Japanese yen, 13.6% weighting. Pound sterling, 11.9% weighting, which is fairly heavy weighting for the pound. Canadian dollar, 9.1. Swedish krona, 4.2. And Swiss franc, 3.6. So that's the dollar index. So when the dollar index is going up and down, it's just versus those currencies. That's the thing to keep in mind. And the thing about the dollar index, it says here, history started, USDX started in March 1973, soon after the dismantling of the Bretton Woods system. At its starts, the value of the dollar index was 100. It has traded as high as 164.72 in February of 1985 and as low as 70.69 on March 16th, 2008. So that was when gold hit a high of 1,000 as well. That's another thing to keep in mind. Gold hit a high of 1,031 on that day. I remember that day. That was the day when all the news about Bear Stearns came out and they had to be bailed out by JP Morgan, if I'm not mistaken. So right now the dollar index is around 95, and gold is actually up from that date. If you look at it, dollar index was around 71. Gold was around $1,000. Now the dollar index has gone up to 95, and gold is at 1,200. So actually, gold has done really well despite the dollar's strength. So that's another thing to keep in mind. So now I want to look at the euro. Actually, let's look at the euro, the chart of the euro. And I've got this from Bar Chart. It's a monthly chart going back 20 years. And the important thing to look at here is just around before 2016. December 2015, when the Fed started raising rates. The euro closed that month at 108.54. So 1 euro back then bought $1.08. Now, and since then, the ECB has been doing a lot of QE. They've been buying corporate bonds. And they're nowhere, they have some negative rates in their in their policy mix. They're talking about maybe, you know, reining in the QE, but they're nowhere near raising rates. I think they might think about raising rates summer 2019, but right now, they're, you know, if anything, since then they've been really loose monetary wise. And look what the euro's done. Where are we right now? 116.31. So actually the euro has gone up since the Fed started raising rates. Can you imagine if the Fed hadn't done that, where the dollar would be and how strong the euro would be? So that's one point I'd like to make right now. Am I saying you should go have euros? No, all these currencies are fiat. They're all flawed paper currencies created out of thin air by you know, a select group of people. They're not free market. It's not free market money. It has, the only thing it has behind it is the power of taxation and the national debts of all these countries. And as we know, people are twigging onto it. There's a lot of unhappiness about the economic situation. It seems to be only the very top who are doing well, and no one really believes in the economic statistics. And that's another thing I wanted to talk about. Yes, Trump has been saying, using the statistics to his advantage, but sometimes I've just thought about it. Maybe I don't blame him for that, because everything else is against him. The deep state is against him. Even some Republicans are against him. So that's the only thing he's got to clutch onto. He might as well take advantage of that. Am I saying it's right? No, but you need to be aware of that. So there's the euro, right? Which is almost 60% of the dollar index. So now let's look at the dollar index. And I've taken two charts. One is a monthly 20-year chart. And I've done a retracement, Fibonacci retracement from the high in July 2001. That high was 121. Let's see, 121.02. It's 121.07 on my retracement there, but sometimes it's difficult to get the exact right number, but it's not a problem. It's not too significant. And then we had that low in March 16th, 2008 at 70.69. And ever since then, the dollar's been going up, and gold is up from 1,031. So gold has outperformed all the currencies, has outperformed the dollar as well. Gold, you're actually doing well since 2008. So Fibonacci, the important retracements, of course, are the 61.8, which is the golden mean, and the 38.2, which is the mirror of that retracement. 50% is also important. So you need to look at those three lines there, the 50, 61.8, and 38.2. And just look how the dollar index is for since, let's see, December 2014, with the exception of earlier this year, it's been trading around those three retracements there. And a lot of people say, oh, I don't believe in Fibonacci, but a lot of time, you know, it's there. It works. Like with everything in nature, there seems to be some correlation with this 61.8% retracement or a proportion. So you can see from 2015, December 2015, the dollar closed at 98.63 in December 2015. That's, of course, when the Fed started raising rates. It has been higher than that for a little, you know, for not that much longer. That was an end of 2016, beginning of 2017. It got up above that 61.8 retracement, but not for that long. And ever since then, it's been coming down. It has rebounded since April, but look how that 50% retracement is acting now as a resistance. It's right around 95.88 right now. Dollar index is below 95, it's 94.92. Longer term as well, this 90 level or 89.93, that will be a key support. You can see how we also got below that level beginning of this year and it's rebounded now. So the thing to take from this is that the dollar is actually hasn't done well since the Fed started raising rates, and that very soon the Fed's gonna probably pair that tightening stance, and you could see the dollar come down quite a bit. Shorter term dollar index. So I've done a Fibonacci retracement, but this is on a daily chart going back to the beginning of 2017 and to the low earlier this year. And actually the 50% on this one is 96, which is very similar to the 95.88 from the 20-year monthly charts. So that's definitely a key level there. We haven't been able to stay above that level, and it looks like right now we're going lower than the dollar index. The 38.2 here is 94, so that would be at 94.14. So that is the next key level. Hope you enjoyed this video. If you did, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter. I'll talk to you later. Take care. Bye.